Welcome back to F.A.C.E. How are you?
Hey Dale, sorry about that. I was muted. I'm doing well, and I've come in the right day because you're talking about sterling.
Okay, right. Okay, is sterling behind your balance sheet?
Well,
Everything.
I'll tell you what, my balance sheet didn't have much sterling for quite a long while, but I've closed almost all my sterling shorts, and
Okay.
I can see what the guys were talking about. Overbought intraday, but
Yeah.
you don't want to base your reference on 120 or 125 because sterling, 150, 160 is kind of like the right relationship against the dollar. And,
Okay.
when I was earning in dollars, it was $2 to the pound, which killed me.
I remember.
But I'll tell you what,
$2.
at 140, sterling still looks quite cheap to me. And you've got
There's
to
people talking
remember,
$2, Stephen.
well,
Longer term.
I don't think it's going back to $2. I'll tell you, if it goes to $2, I'm going to move to America. But
okay, that's really a desperate
if
move.
It goes to $2, probably it's going to be the era that you won't want to move to America.
Well, I don't know. I like America, but
yeah, me too. But if it goes to $2, there's going to be a very good reason for it, and I don't think things in America are going to be very rosy.
Well, you say that, but it was $2 pound was $2 in 2006, 7. It's not
Very
that
true.
long ago, 15 years ago, and America was doing pretty well then. So,
Good
I think
counterpoint, Stephen.
So different circumstances, and the reason is going to be different for it to go to $2.
Well, it might
than
be.
It was back then.
It might be this time, but I think you don't want to be short sterling anymore because we've got, compared with the rest of Europe, we're doing much better on COVID. So the vaccination program is way ahead of the rest of Europe. We've done very badly. So the economy was very badly hit by COVID, but we should bounce back out of it much more rapidly. And relative to the rest of Europe, we're much more tech oriented. So obviously the quoted markets aren't as tech rich as the United States, but the economy is quite tech rich. There's quite a lot of tech activity goes on in the UK, particularly in London. So, I wouldn't write off the UK economy. I think we're set up, we've got a good setup. And although you might not want to buy sterling today, I wouldn't rule out buying sterling medium term.
What do you think about, do you follow Euro Pound, Stephen? I know you're a stock picker and we're talking Forex here. Euro Pound is, sharply lower today. So has cable become kind of like safe haven for people in Europe? Do you think the Europeans are dumping euros and buying cable?
Well, it's possible. I mean, I don't know what's happened today, Dale, so I don't want to particularly comment on
well,
that,
for example, the euro's up a few pips with cable up over 100. So
well, the thing is that I think you've got to be very cautious about the euro because the euro is a very artificial construct, and there's all sorts of strains and pressures we've seen across Europe in the economies. Now, look, they're all committed to maintaining the euro, but will Italy, will Greece, will they manage to claw themselves out of their current predicament? And I think, at some point, Germans retire at 65 and they look at themselves bailing out Greece where they retire at 60. And, if you were a German voter, you'd have to ask yourself, what is this all about? I've got no relationship to these Greek people other than the fact that we're sharing the currency. And I would be quite upset about it. And you've got to remember also that the tone at the top is going to change in Germany because Angela Merkel is going to retire. Right. And we're going to have a new leader. We're going to have
right-wing nationalists.
I hope not. I can't imagine that happening in Germany. I really can't. But
Well, it happened, a century ago.
It happened a century ago, but it was so awful that hopefully, memories are still fresh.
Yeah.
But we're going to have a new leader in Germany. I'm not an expert on German politics, but there's various factions bidding, and these European governments tend to be coalition governments. So it tends to be, in order to get your coalition in power, you've got to side with a more marginal faction, and they therefore can hold an undue power relative to their size. And the Greens have been doing very, very well. Interestingly, the Greens got 7% of the vote in the London mayoral election this last weekend, which that really stunned me. So Euro, I would be very careful about, because I just think.
What did the Greens, Stephen, stand for? What's their political platform?
The Greens are environmental party.
That's what I thought.
They're Save the Planet.
Yeah, and tree huggers.
They're the tree huggers. But you know what?
Okay.
We'll all be tree huggers in a few years, because
we're going to miss them, or what?
Well, we're missing the trees. I think this is a movement which is far more pronounced in Europe than it is.
Every time I hug a tree, though, I get scratched up by the bark.
Yeah, but you probably drive a pickup truck and have a house with air conditioning and pollute the planet. Whereas we in Europe, we're trying to save the planet, and there's a massive swing going on. This is partly demographics as well, remember, because you've got more younger people voting, and the more younger people you have, the more environmentally conscious they are, and the more likely they are to vote green. So the bottom line, Dale, you didn't invite me on to talk about politics, but I think the bottom line is that buy sterling medium term, but be careful of the euro, because the euro is one of these things that can come back to bite you, because something unexpected can happen, and it's just not a normal currency. So I think you've just got to be slightly careful about it.
What about you've turned this into a currency discussion. What do you think about some of the commodity currencies like the Australian dollar?
I'm not an expert.
Not familiar? Okay. Let's get back to your wheelhouse then, behind the balance sheet in the book you wrote. And, we've had ongoing, continuing bull markets across the world, just in different degrees. I'm not sure. I haven't looked at the London market, the FTSE, in a while. I know it was underperforming US. What are you seeing out there, and what do you think are some good picks? Could some green stocks be the way to go, since people are, where there's going to be a lot of money spent here in the US if President Biden gets his multi-trillion-dollar package passed? What's on your radar today?
Well, sure. Stephen? I think, obviously the strength of sterling is weighing slightly on the London market, because a lot of our big stocks tend to be overseas earners, and all the biggest stocks have got very little of their business in the UK. So they get hit by the translations. As the pound gets stronger, they find it harder to grow their earnings and their cash flows.
Right.
But I think there's a huge amount of small value companies in the UK which are sterling denominated, which are dealing domestically, which are doing extremely well. And this is not a recommendation to buy it today, but stocks like Next. So Next is a UK retailer, but it's got like
NEXT.
NEXT, yeah.
It's one of my favorite words, most important word for investors and traders. Because we all dwell in the past sometimes. We look back and say would have, could have, should have, and instead of wasting that energy, you should be saying next. Just like a great athlete who makes a blunder on the field, he doesn't sit there and commiserate it and talk to his teammates about it. He just it's good to have a short memory and move on.
Yeah. Well, Next is an interesting company because it's not just an apparel retailer. So it sells men's and women's clothes, but
yeah,
its background was it used to have a catalog, and it sold a lot of its products on credit through the catalog. And that catalog, the sales have translated into online sales. So it now does a lot of online sales, but it makes a huge margin when it sells on credit. And it does that.
Do you want to share your screen, Stephen? I mean, I have your logo up there. You want to just talk, or was there anything you wanted to visually show people?
I don't have anything on next.
All right, so
right
go ahead.
here because I didn't know what we were going to talk about. But let me just tell you a bit more about it. That next is interesting because it's got a very good online business, and it's now doing a sort of mini Amazon. It's actually offering its logistics capacity to its competitors. So it's not just a retailer, it's also a tech business in a way. And it's run by Lord Wolfson, who is one of the original family behind Gus, Great Universal Stores, which is next is a spin-out from that. And so Lord Wolfson is one of the original family, and he's been, I think, one of the best FTSE 100 chief executives that we've seen. He's actually a brilliant strategist. And even if you don't want to invest in his company, I would say to you, your listeners, your viewers, really worthwhile going on the Next website, Next PLC, looking at investor relations and reading some of his stuff. In my courses, you know, Dale, I've got an online training school. And when I talk about buybacks, I use the philosophy that Lord Wolfson wrote down in his chief executive's report, I think back in 2012, because he explained the reasons, the strategy behind buybacks. And he did it better than anybody I've ever seen. So Next PLC is very interesting stock. Maybe not necessarily, you know, one that you need to buy right now, right here, because it's had a good run. But generally speaking, that's a symptomatic of the sort of value on offer in the London market. And it's really an interesting market, I think, now, because we're early coming out of COVID. We've had a very bad experience. So we've got a very low base we're coming from. And we've, you know, like you, we've got very loose fiscal policy, very loose monetary policy. So the economy's growing extremely fast. But the worry I've got here, and I think it's probably a worry you probably want to have in America as well, is inflation. I don't know what you're seeing there, Dale, but I'll tell you, my personal experience is that inflation is already very strong here. So I just went for lunch with my wife to the local sort of healthy Japanese, Asian style food place. And the prices, they changed the size of the bowls. So it's like a takeout. It's like a takeout, or you can eat in, but you get it in a plastic container or a cardboard container. And they changed the size of the container, and they put the prices up. So you've got both shrinkflation, what we call shrinkflation, where they reduce what you're buying, and inflation, where they put the prices up.
Yeah, you're exactly right. Well, a lot of it has to do with what's happening in the commodity markets. You have grain prices, meat prices through the roof. Okay, so it's, you know, you've never seen prices like this in grains and meats, at least in my career. There used to be a war chant at the Board of Trade for beans in the teens, and they're way above the teens. So, you know, you could just look at almost anything. Corn, same thing. Wheat, same thing. Sugar, same thing. So commodity prices, and it's not all because of supply chain issues. Some of it's supply chain issues. Some of it's just supply.
Yeah.
And a weaker currency. So yeah, we're seeing it here, but we're only seeing just the beginning stages of it. Yeah, haircuts, everything's gone up. So yeah, very different environment than we had a year ago. Very different.
I mean, it's just
without a central bank that I think has either the capability or the willingness to. This is their goal, so they're going to accomplish their goal. For higher inflation in spades, probably be more successful. I think they're already successful, and they don't think they are.
Yeah,
because of their measured moves.
I think it's a real worry though, because once inflation starts, it's quite difficult to get it out of the system, and they don't want to put up interest rates, and that's traditionally been their principal lever to pull against inflation. So they don't put up interest rates to cool the economy down, then inflation is going to get hold. And yeah, I mean, that's good news.
And that could really only slow down maybe economically sensitive commodities, but you can't print grain to bring down the price of grains, and higher interest rates aren't going to affect yields on crops.
No.
So, there is some, really real inflation, not just monetary inflation, based upon supply demand and the supply of grains and stockpiling by China for years. They've been stockpiling wheat, so they knew this stuff was coming. And, I don't know how you resolve a Super Bowl market in food and how you get it to come down without, really increasing production, which can take quite some time. And, that's more of like getting back to what you were saying, a climate issue.
Yeah.
On growing food.
Absolutely. And it's not just food. I mean, copper. Somebody was asking about copper, and the supply response is going to take quite a long time, right?
Yeah, to find new mines or reopen mines. Another very long process. So my friend and associate Steve Volge likes anything that has intrinsic value will go up in this environment.
Yeah, I think that's right. And I'm not as big a fan of the energy complex, and in particular that there's a lot of people like the big oil majors, which are very significant components of the FTSE 100, and I've been very negative on them for 2-3 years more now, and I'm still quite cautious about the big oil companies, because we're seeing so much money being diverted into ESG related funds that those funds are never going to own an oil major. So almost irrespective of what you believe about the energy market, it's just going to be very, very hard for those companies to attract new shareholders. And they've got a huge problem as they try and shift away from their traditional hunting ground of oil and gas, and they're now starting to get into things like wind and solar, and they're paying just ridiculous prices, and they've got a huge balance sheet to shift, so
yes.
they're going to push the price up of these renewable assets, and they're going to find it very, very difficult to generate a decent economic return. So you've got structural challenges within their business, and you've got the less attractive to the growing pool of shareholder money. So they are kind of like the thing to really avoid. But other commodities, I think, are, it's hard to see what you shouldn't like, especially in this sort of environment where you're getting accelerating economic growth, admittedly coming from a very low base, but also, many areas, restriction on supply. So
how about PMs as a hedge? Precious metals. What do you think? Are there miners that you've looked at balance sheets and you like, and is it possible that a lot of the majors will start to look to buy up smaller gold companies and buy their production? Could we have some M&A going on in the mining sector?
Well, I think there will be, and especially as prices rise. I mean, I've been slightly bemused that gold hasn't gone up more. You know, when you look at the cryptocurrencies and you look how strong they've been, you would have expected there just to be some spillover into gold. But of course,
I've heard it's competition to gold.
Well, it is competition to gold, but you think that, you know, one would drag the other up. You know, normally that's what happens. I mean, the people that are buying crypto aren't the traditional gold buyers. But you think it would make older people like me buy more gold, right? Because, you know, you might say, well, I don't really understand Bitcoin, but I understand why people are buying it, because it's a store of value. It's not a fiat currency. So why don't I buy some more gold? Because at least I do understand that. And it's puzzling to me why gold hasn't done better than it has. But obviously the miners are well placed. And, you know, if we do get more inflation, then I think people will turn to precious metals. And so the miners will be in good shape. But I'm not a real, you know, the guy that I look to for the comments on gold is Fred Hickey, the High Tech newsletter, because I think he's a brilliant analyst, and he spends much less time these days talking about the tech sector and much more time talking about gold. And he's very good at spotting the smaller gold companies, which he thinks are going to be targets. So I would listen to him rather than listen to me. That's where I go for my gold advice.
Where do you go for your view on interest rates, the gilt market? Because I know here in the U.S., Paula says he's not even thinking of raising rates. But you know what? He may not have. But when you look at what rates have done over the past, say, 6 months, 8 months, you know, we were down to 0.50, and rates have tripled. And it looks like they can make the 10-year note could make a run for new highs in yields. What's happening there with interest rates in the UK?
Well, I think we just follow you.
I thought we followed you. I was taught early on, I'd watch the FTSE as kind of being leadership, but you know, those are the old days. But you think that that the UK now follows rates? Say, for example, what do you get for 10-year paper in the UK right now?
Well,
you know,
we've got the most I mean, the thing I think that's most extraordinary is how low the difference is between the 10-year and the 30-year, and even
the spread.
Yeah, the spread. And I was talking to a very famous property investor who is, you said, where do I go for this?
Oh my, yeah. Your real estate market's on fire too, right?
Well, he's been very, very smart on bonds, and I go to him and I go to Russell Napier, whom you may have heard of, financial historian, who's written a couple of books. And I interviewed Russell for Real Vision a few months ago, and that interview is now up on YouTube. And Russell's, I mean, he's one of these guys that you don't want to listen to what he says and do it today, because you know, he's one of these like brilliant people that are too far ahead of the market.
He sees things before the market recognizes it, and so you can be early with his stuff, but it ends up manifesting. Is that what you're saying?
That's right. Like me. So, you know, I kind of I spend time listening to what he says and trying to figure out, you know, how many years too early he is. He laughs himself about but you know, some of these great thinkers are just, you know, they're brilliant that way, but they're not, you know, they won't make you money in your trades. You need to think about, you know, when you deploy it. And he's got some very radical views about what's going to happen. And he's, you know, he's of a view.
A crash in real estate?
Well, he's not predicting any crashes, but he thinks that eventually the government's going to control the allocation of capital. And he looks back to the period post the Second World War. And I think, you know, in many ways, this period today, if you're trying to find a parallel, looking for the parallel in the last 40 years when we've had interest rates go from 15% to zero is the wrong time to look. And what you've got to do is you've got to look back at that period in the late 40s and through the 50s, because that's a much better parallel. And in the late 1940s, the French government had a bureau which allocated capital. And there were, I mean, you think that's mad, but in that interview, he talks about how the US controlled the allocation of capital, and the US had a similar strategy. And, you know, I think that's the thing that we need to worry about. If we get inflation taking control, governments can't put interest rates up. What else are they going to do? And I think that he thinks that what they're going to do is they're going to control where the capital is allocated. And if that happens, that's a complete disaster for all of us.
For what, people in the markets? It'll shut down the markets?
Well, it won't shut them down, but it will make them, you know, very
non-functional, dysfunctional.
Yeah, dysfunctional, and you'll be at the whim of governments. So whether you can, you know, raise capital to grow your business will be down to whether the government says you're allowed to raise equity. I mean, it'll be fine for, you know, those companies which have got strong cash flows and don't need any external capital. But
for the capital formation and new companies and innovation and everything, it's going to be a roadblock.
Well, it'd be horrible. Yeah, I mean, it would just be a disaster. So we've got to hold.
I hope you're right, and he's a decade early.
Oh yeah, I mean, I'm sure he's years early. But you know, I think we've got to think about that in the back of our minds. That
maybe that's part of the Great Reset. You know, do you hear people talking about this, Stephen? And then we have to wrap it up, and I want to make sure that people know where to find you. What's your concept of the Great Reset? Do you hear that bandied about in the UK?
Yes, but different people have different views on how it happens.
Yeah. Okay. And is it a currency reset?
Well, I mean, people, we just don't know, do we? We know that we're in a very unusual time, and we know that to get out of this will require some change, and we just don't know how.
Right. Okay. So I'm going to show your website, okay, and the book that Stephen wrote, and look at all the great endorsements that Stephen has. And you could get Stephen's book on Amazon, right? And there it is.
In fact, the book just came out on Audible. So if you like listening to books rather than reading them, you can get that now. And my website's behindthebalancesheet.com, and you can find me on Twitter at Steve Clapham. And since I last spoke to you, Dale, I've set up a YouTube channel. It's a YouTube channel, Behind the Balance Sheet, and we've been growing. I mean, I've been posting a new video every single week, and it's been growing really nicely. So I'm really pleased about that. So check out. It's all free, obviously. And
okay. Well, I just want to say I appreciate you coming in. Thank you for your time today, Stephen, and you know, it's always interesting getting views from outside the U.S. And my goodness, you're a Renaissance man. So you are not only interviewed, but you conduct interviews for Real Vision. So
yeah, well, they liked my interview and said, you know, would you like to have a go yourself? I said, sure.
Okay.
They're stupid enough to let me behind the camera, so to speak, and it's been good. It's been great fun. I've been really enjoying it. And Dale,
it is fun.
It's so kind of you to have me on. Thank you so much. I really appreciate it.
Who better to ask the questions than who has been answering the questions? That's the way I look at it. That's the way I've always seen it. So thank you very much, Stephen, for being with us. And I'll be talking to you down the line. We'll set something up for you to come back.
I'll really look forward to that. Thank you so much. Have a great day.
All right. That's a wrap, everyone. And we hope that you enjoyed the interview. Everyone have a good week, and you could join the team in 13 minutes to get the morning edge from Blake and look at his bias chart, and the whole team is there contributing. So see you guys tomorrow for Turnaround Tuesday. Don't just count your pips, count your blessings. Adios.